talk about direction for the business, I'm talking about the numbers that run your business. I'm talking about looking and understanding how your business is running as far as your income and your expenses and where your business is heading, but not from a historical perspective, not from Julia's perspective, who's looking at, your accountant is looking at your historical numbers. Your accountant is not probably sitting next to you to say, this is what we need to do to create a business plan for your business. Otherwise, they're way outside the box. We're talking about creating a business plan or pro forma for your business. And so this will be looking forward from today, where will my business be in 1 year, 3 years, 5 years from now? This is typically where everybody starts. Everybody starts with the first thing they do is they go create a logo. Because it's fun, it's exciting, it's sexy, it makes you feel like you have a real business. Then the next thing you do is you get that logo and you put it on a card. And now you have a card that you can pass out. Can we turn this down just a little bit? Keeps bouncing off the speakers. These are just place marker words to use.
Okay.
This is not relevant.
Okay.
This is just a really cool infographic that has nothing in it. But see how excited you guys got about that?
Yeah.
You guys are all excited about that. So, Facebook page, logo. I got business cards. I ordered 500 business cards and got my logo put on them, and it says President. I have no idea how much I'm going to sell, what I'm going to do, what my path looks like to run my business or start my business. I know that, okay, I got to install X number of garage doors or do so much repair, or I need this much revenue a month, and that's going to make enough that I can pay myself this by the time it's all said and done, and oh, I forgot about my taxes. And then you get, and then they get to the end of the year and you hand this box of stuff to your accountant and they say, well, here's all your expenses and here's all your revenue, and so you made this much money, but it wasn't planned. It was historical, so we're looking for things that you can put in place, like a Proforma, that will give you a guide to look forward. So this is an example of what a 5 or 6 year Proforma would look like at we're up at 10,000 feet at this point, right? This is by year. We're looking at the income, the money you bring in each year in your business. The expenses come out of that, and then you get your estimated profit. So income minus expenses, profit. Pretty simple, right? And this is before taxes, before depreciation, anything that you might take off of that. So this number, the idea is to, when you build a Proforma, is that when you build it forward and you make assumptions about how much product or services or anything that you're going to sell, that you can project what you will make that year, and you can grow your expenses the same way as I'll show you, and then you start to see the bottom line, which is the most important part. You might think that profit's the most important part, and it is really important, but the most important part is surviving. Most businesses go out of business because they run out of money. And so it's because they're just saying, oh, let's go over here. I was profitable this year. I made $133,000. Well, you might not have all that money because it may be tied up for different reasons. You may get part of it later. Your profitability, and I'll talk about what a P&L really looks like and why, but your profitability is for a period of time, but you may not have access to the cash. So watching when you bring your cash in, so I'll pick on you again, Andy, you may have 50 outstanding invoices that you billed on December 28th, and depending on how you do your taxes, accrual versus cash, you may be waiting for that money to come in, which may represent $10,000, $15,000, but you don't have that money. But you need to pay for materials. You need to pay for all the other things. So from a cash flow perspective, you don't have any money. So that's why it's important to look. And then these are some of the areas where, from a Proforma perspective, on why this is important. I beg you to do these exercises, to look at your businesses. And if you need help, I will help you to figure out how to do this. You have to do this as a business because you have no clue whether or not that you want to be in the business that you're in. This last one, does it make sense? If you took your business and went out 5 years and you saw in year 3 that you still were not making any money and you were upside down $150,000 and you knew that today, 36 months before you got to that point, would you maybe rethink doing that business? This is the kind of information that you're gathering on your business so then you can make that decision now and gain 3 years of your life back, or I got to change something. Either I got to sell a lot more to make this business work, or I got to cut expenses to be able to make this business work. But it forces you to go through that exercise. The other thing is that marketing sheet, that you saw, that marketing plan. You can't have a marketing plan if you don't know how much you need to sell. Exactly. Selling whatever you sell today and sell as much as I can is not a marketing plan. That might be a day-to-day sales tactic, but that's not a plan to say, what's your plan to be successful? Sell as much as we can. That may not make sense. What if you sold 100 units in a week, but it ran your expenses up another 30%, and if you only sold 70 in a week, you saved that money and you were 1.5 times more profitable. These are the things that will come out of this exercise. The other thing is what happens a lot is this. Oh, I'm not paying myself. I'm not an employee. I don't look at myself as an employee in the business. I own it. So whatever the profit is for the year, that's how much I make. Well, that's not the right way to think about the business. You have to start with that you're going to pay yourself and that you're a line item on your Proforma, so you make sure that it makes sense. You're kidding yourself to say, my business is making it. Well, how much are you paying yourself? Well, I'm not. Well, that's why your business is making it, because you're not getting paid. You're just running a business to pay other people and to sell products that you don't make any money on. So those are some of the things that will force out of that. And the other thing is that if you get to a point in your business and you know you don't have enough money or cash, by having something formalized like this will allow you to talk to investors to be able to say, I need to bring in this money. I need to bring in $100,000 because in month 28, I am upside down that amount, and it's going to take me 33 months before my business really starts to make money and becomes profitable. But if you can give me this $100,000 today, that'll get me through that point to where the business makes sense. So some quick financial terms. And I don't care if you work for yourself or if you've got employees, this stuff is all relevant. It applies to your personal finances just as much as your business. So the accrual versus cash, I said that earlier, that's just an accounting method. If you hear people talk about that, cash means is when the cash came in the door, you account for it. Accrual means when I invoiced it and I didn't get the money yet, I account for it. The 15 or 50 invoices that you did on December 31st, if you're billing an accrual method, then that revenue goes into this year. Typically, we run Proformas on accrual, we run taxes on cash. That gives you more float and gives you more time in use of your money. Talk to an accountant. You hear people talk about chart of accounts and coding and those kinds of things. Those are just all the different categories in your QuickBooks or Xero or whatever you're using. That's things like labor and products and equipment and kombucha, and all those things are all expenses. All the stuff that you have people that come into your business that you need to run your business. The P&L, the profit and loss, income minus expenses, the balance sheet, we'll talk about that in detail, cash flow there. And then the one thing is that in this Proforma I've built this monster Proforma. Austin slapped my hand yesterday and said, there's no way we can hand this to everybody. It's a spreadsheet that goes out 12 tabs, and it's 2 different types of models depending on what you have. So I'm going to kind of suck that down to something that's a little more consumable, because you really need to be able to walk through that. But the difference is a one-time sale versus reoccurring. So somebody that has a subscription base, like if you sell somebody 6 months of advertising, then that's kind of recurring for that customer. Somebody that has a software product, I don't even know what your business model is. I guess it's one time, although I feel very reoccurring when I come in. But I mean, these are things when you think about your business model and how you're bringing revenue into you're switching to a membership base, which gives you more leverage to have reoccurring, more manageable cash versus that one-time sale is really your business is a lot of times it's up and down because you don't have as much control. If you can figure out things like for your business, Andy, if you have a service package that for $59 a month, I'll come out 3 times a year and look at your garage door and make sure the springs are great and do that. And that brings $200 a year into you, whether you go out there or not, whether they call you, you keep the customer. I have a service contract with you. I always have to call you when I want to work on my garage doors. You're keeping your customers close, but then it becomes a more predictable revenue opportunity versus just one at a time, right? Which is a very painful model to grow when you don't have software or membership or something that you can grow. So profit and loss, quickly, it's all about a period of time. It's, hey, I want to go from here to here. It doesn't have to be for the full year. People run profit and loss or P&L. I want to run it by the month. I want to run it by the quarter. I want to run it by the year. So then you can be taking snapshots of different parts of your business throughout that. And it's very simple. That all it is just all the money you brought in a period of time and all your expenses. That's it. The balance sheet is all your assets or liabilities. This is the cash you have in the bank. This is any inventory you have. So if you've got stuff on the shelf that is worth money, that means it's an asset. So you get inventory. If you've got equipment, building, furniture, those things are all there. Liabilities are those credit cards, are the loans that you have on a building or equipment. Any of those type of things are on the bottom half. And then whatever's left over when you subtract those two is how much equity that you kind of have retained in your business for what you have. So this is all for a period of time, just one date. This is December 31st. You can say you go run a balance sheet today, right now. You have to have all your stuff updated in your accounting to do that, but then this will tell you where you are. When you're trying to go get a loan, they want to see this because they want to see how much money do you owe other people? Do you have credit card debt? Do you have loans out there? And if you ever have to provide a personal financial statement, that also is kind of looking at it the same way. It's like, it's really just a balance sheet. It's all my assets and it's all the stuff down here. You need to buy a new piece of equipment. Somebody's going to finance a $15,000 oven for 5 years. They may say, send me a personal financial statement. I want to know how much money you make. What assets do you have? What other things do you have? So then cash flow is kind of a blend in some ways. It's a totally different beast. This is about, so if you see in January, you've got, here's your revenue, total money in, here's your total money out, not necessarily expenses, because you might be paying on debt. Let's say you used a credit card to get your business up and going, and you're paying $1,000 a month for that credit card. Well, that's cash going out. That's not an expense. That's a balance sheet item. So you've got $12,000 here minus this. Your net cash impact is here. So in month one, we're doing great. We have $10,000 in income or money coming in, $9,000 going out. The net for that month was $1,000. We add this to this, and that's now we have $3,700 in our bank account. So watching this is really the critical piece of what I'm watching in any business I've ever built, because I don't want to run out of money. I got to be able to pay people. I got to be able to buy stuff. The P&L will take care of itself if you can keep the cash flow afloat, or it's going to be, I don't have enough money. I got to bring an investor in. This is impossible for me to get there. Okay, so don't let this be overwhelming. This is just a place to start. It's an estimate. It's just an idea to make you think, I'm going to go out 3 years, 5 years, and really say, so you just started a membership subscription, and you say, okay, I'm going to add 5 a month. So at the end of the year, I've got 60. At the beginning, on January 1st of next year, I know we're mid-year, so it's January 1st, I have 60, I'm adding 5 more, and I have 65. I have 120 at the end of the second year. This is the way this thing builds. Now you're billing 120 times whatever you're charging a month, and you don't have to go get that customer. So I would encourage everybody to be looking at their business on how to build reoccurring models, because it brings cash in a more regular basis versus one-off. So if you don't have all the answers to build this stuff out, it's okay. Getting it on the paper is the hardest part, and making you think about the business and the things that, like, well, I have no idea how much I'm going to sell in 30 months from now. Well, that's okay, but you can take a guess based on where you're trying to build it or where you want the business to go, and that'll give you an idea, does this really make sense? So back to this, again, we talk about the top piece, income, operating expenses, our estimated profit, and this is just building year after year. So this is the cumulative effect of this particular example over 6 years. I lost I have 38,000 negative cash. I made a little bit of it up, but I'm still out 35,000 at the end of the year. I'm out 42. Finally, I turned the corner somewhere between year 3 and 4 to start making money, and it really starts to build the momentum. Eye chart. This is one of those. This is the top half of one of those tabs. This is why I've got to get this thing fixed up. So This is, if you look at the yellow, this is just the products we're selling. And you would look at this, and again, don't worry about trying to fit all this in. It's just think about how we build this, and then we'll give you a tool to use. If you think through this, January, February, all the way through December of the year, this is product 1, product 2, product 3, and how many we're going to add of each of those products. So in June, I'm expecting to sell 3 of product 1, 2 of product 2, 2 of product 3, for a total of 8 products this month. Down here, this is the totals as I add. This is a cumulative model, so I added 2 here. When I added these 3 here, now I've got a total there, and this keeps building. So at the end of the year, Jenny has 66 people under her subscriptions, if she maybe had 3 or 4 different types of subscriptions that she had. This is where we get into the pricing. These are the pricing of the different products. And it doesn't have to be a subscription. It can be products. It's whatever you're selling. And how the money starts to ramp up each month for total revenue at the end of the year. This area here, this is all balance sheet. This is debt stuff. You get a grant for $3,000. You have to use your credit card to buy something. You get a loan from the bank. Any of this kind of stuff, that's what's impacted in the middle piece. These are all part of that chart of accounts that are relevant expense categories that you're using in your business. So here's where you have, website design, Tricia Bird. This is her line items, right? So down here somewhere, there's accounting. Okay, that's Julia. You've got marketing outsourced. That's Kevin. Garage doors. That's Andy.
Why is the rounding number so big?
That is down here for party celebration down here. But all the things that you can think about in your business, you need to break them out so you know where your expenses are. The more that you can get granular with your expenses, the more you'll know where all your expenses are in your business. And once you do this, then you'll align these just with your QuickBooks chart of accounts. So then they kind of line up and you know that, like, okay, here's my office rent, here's my utilities, here's bank charges, different things. Here's my HR piece, here's my contract labor, here's my monthly bonus, here's where I'm paying myself. There's a line item that I'm paying myself in this Proforma to make sure that the business can support it. You're just kidding yourself by not paying yourself and doing this in this setup. So that is all the expenses, and you see the expenses across the board here for a total of 57. Well, we lost money this year. So your expenses were here. The net change to your cash, your money, was the revenue we brought in on top, minus these expenses, minus any kind of credit card payments or anything you had, brings us down to, here's our net impact of our cash for January. So we now have, if we started with 0 in our bank account, we have a negative $3,000. Now we went backwards $12,000. We had a software purchase. And that could be depreciated from a tax perspective, but depending on how you lump it in here, we're going to say it's an expense because we're looking at cash flow. So I had to write a check for $8,500. That's why I went backwards $12,000. Now, after 2 months, I'm behind $15,000 in my business. Well, this just keeps growing because it's a brand new business and I'm growing it. And by the end of the year, I know that I'm going to be negative. So if you could scratch up $40,000 and you put it in your bank account and put it here in the beginning, you would spend all that money, but you wouldn't be upside down. Now this top piece is the bottom of the next sheet, and you can see it kept growing because our cash flow was not getting any better. We started to turn the corner here in this month, but it's not enough to flip this, our cumulative. So by the time we're at the end of the next year, we're negative 42. That carries over to the third year, and eventually, boom, in September, we start having a positive cash flow. This is 36 months out here, or 30 months in September. The reason I put this up here, and there's a lot, that number right there is the one to focus on. Does anybody know why that number is the one to focus on this sheet?
It's the largest.
It's the largest. So in your first 3 years of this business, you're going to be at a position that you are upside down $60,000 based on how many units you thought you were going to sell, what you thought your expenses were going to be, all those things. Wouldn't that be powerful to know that now versus 36 months out? To at least have an idea, like, okay, I can stomach this. We've got an IRA we can tap into. We've got money that we can figure out how to get this done. Or we've had somebody that says they're dying to invest in our business and that we can plug that in. Because you got to survive to September of the third year to where you're even have any positive cash. It didn't mean your business wasn't profitable. This just means how much cash you're going to run out of because you're burning that cash every month. So that third year was feeding into here, and you can see as our cumulative started to go, that's why this has finally changed as we get to the end of that third year.
That's fairly typical, isn't it? 3 years?
It depends. It depends on the business. It depends on what you're doing. We are, if I look at this business, we had a lot of upfront cash because of expense for the building. And Amber's been an employee of Bridge Space for 17, 18 months with little to no revenue coming in for the first 12. So when I looked at my Proforma, I'm upside down through here, and all that expense is weighing us down, all the way out through some number of years. Now, if I look at a P&L for today, because all the offices are rented and we have all the things, we would be profitable by the month. But I'm still making up for lost time. But I knew that when I did the Proforma 2 years ago, that this is about where I would be. So I said, okay, this makes sense. Or on the other hand, because the building is owned from a different LLC, Bridge Space is the tenant and the building owns, I got myself into a lot of issues with the building because of all the extra expenses with rehabbing it. And as I started to adjust that in my Proforma, I realized, wow, I'm gonna need a lot of money here come this period of time. And I had to bring an investor in to come in on part of the building. That's the stuff that you want in your business. Your business is not too small for this. This is your life for the next 3 to 5 years, and whether or not you should continue down the path where you're going, or you should say, I could use my time to do something else that could be more productive or have a better life, turn around 3 years from now, and you're still in a place that you are now that it doesn't make sense, and you've lost 3 years of your life. Okay, so for the breakout, we're gonna do this. Go ahead.
Oh, and Ben, you're going to give everyone a copy.
I'm going to give everybody the full-blown document in Thinkific, but I'm gonna change it up to where it's not quite so complicated.
And this is an additional value, you guys. Is something actually Ben typically charges for, but you're going to get a copy, like he said, to where you can sit down and start to actually take all of your numbers. We're going to work on that in our breakout here, but actually put that into this document and see what your business looks like now and over whatever period of time.
And you're going to have to invest some time into doing this, but it'll be the best time you invested, and it'll feel so boring, and you'll be like, I don't like this. I want to go work on my logo, and I want to go bake cookies, and I want to go do my stuff that I love to do. But this is something you have to do for your business to know where you're heading.